Welcome back, fellow traders, to a new video of Timo trading techniques. In today's video, we will explore a new trading technique with two indicators, the QQE mode and the ultimate moving average, or UMA. We will also use Heikin Ashi candles and test out the strategy in a live backtest at the end of this video to get an idea about what profits to expect. Without further ado, let's dive into the strategy and see what is it all about. First, we add the indicators for this strategy. We go to TradingView and click Add Indicators. We type QQE mod and add it to our screen. We also type Ultimate Moving Average and add UMA to our screen. We do not need to change the settings of these newly added indicators, but we do have to change our candlesticks presentation if need be. Normally, we have these on default, and you can change them by opening the menu near the candlestick symbol, like so. We then select Heikin Ashi candles, and by doing so, are now ready and prepared to execute the technique. Before we examine a first example, I want to mention the optimal time frame for this strategy. After many weeks of backtesting this strategy thoroughly, we come to conclude that the 1 hour time frame works best for this strategy. We will now start by taking an example of a long position. To find a good entry position, it is important to keep a few steps in mind. Step 1. Identify the support and resistance zones before we can take a position. We first have to identify the support and resistance zones based on past price action. These are zones where the price reverses or bounces back. In this example, we see such zones depicted by orange boxes. As we can see, these zones act often both as support and resistance throughout time. You can identify these zones by looking for past price highs and price lows happening on certain levels multiple times. By doing this, we have a more than fair chance price will reverse when price approaches these levels in the future. Step 2. Waiting for a long entry position. As soon as we have found us a good support zone and price is close to this zone, we look to the QQE mod graph. We see a white line going up and down, swinging around a horizontal line on level 0. Whenever this white line takes a positive value, that is, the line crosses the 0 level upwards, and we see a green, or in my case, a blue bar closing above this white line, we are ready to take a long position. However, before we do so, we have to confirm one more thing. We now look at the UMA line on the price graph. This UMA is green in upwards trending price movements and red in downwards movements. Whenever we have found a possible entry by looking at the QQE mod, we have to confirm this by checking if the UMA turned green. If all these things are in order, we can finally take our long entry position. Step 3. Sell our long position. We sell when the reverse conditions from Step 2 are met. This means the white line of the QQE mod becomes negative or crosses the vertical 0 level downwards. A red bar closes under the line and the UMA becomes a red line. If all these conditions are met, it is time to sell our position. As we can see in this example, a very nice profit is our share. You may be asking yourself if this strategy is profitable over a long period of time. We will see in a moment if and why this strategy really works by doing some live back testing over a longer period of time after we have watched a short example. But first, if you are wondering on which platform is best to do this signal and other strategies on, then I can highly recommend you Bybit, one of the top cryptocurrency exchanges in the world. Bybit, it is safe, secured, and transparent. Be sure to click on the link below. You could also receive a nice bonus of up to $30,000, so you could try the strategy out for free. In the next example, we will study a short position. The steps are the same as for a long position, but in reverse. First, we look for resistance zones by studying past price action. Once drawn, we zoom in on the QQE mod graph and wait for the white line to cross the 0 level in a downwards movement. We also check if a red bar closes below this white line. The moment this happens, we look at the UMA, and if it is red, we have our needed confirmation and are ready to take a short position. After we have taken a short position, we then let our position run until the UMA turns green and the white line of the QQE mod crosses the 0 level upwards, followed by a green or blue bar closing above. This is our signal to close the position. Again, as we clearly see, this is a nice profitable trade. Now we finally put our technique to the test. I will also, as usual, fast forward so we can see the results more quickly. The results are truly astonishing. In a period over 2 months, we found us 20 trades. Of those 20, 14 were profitable and 6 were losses. But almost all of those losses were rather small. We finally ended up with a win of 150, 2.1%. This means that if we were to start off with a bankroll of $1,000, we would have ended up with $25.21, netting us $15.20, $1 in profit with little to no risk at all. Also, this is without leverage. If we apply a leverage of, say, 10x, we potentially could have made $15,000 in the course over 2 months with only a bankroll of $1,000. It is clear this is potentially a very profitable technique. And the best part of it all, you could do it too, just by following the steps explained in this video. I want to thank you for tuning in, and I'll see you soon with more profitable and easy techniques. Also, if you like our content and want to see more of these trading strategies from Timo Trading Techniques when they are posted, please click the subscribe button below.